Do you remember the banking crisis from 2 years ago? Silicon Valley Bank, First Republic, what seemed closed is now reopening Pandora's box. Regional banks in the United States are plunging, and it's not by chance. There is fear, real fear of loans that will never be recovered, toxic credits that could unleash a larger chaos. Since interest rates started rising, the U.S. banking sector has accumulated over $400 billion in losses. And that's just the tip of the iceberg. Behind those numbers is something darker. Banks are hiding the problems, disguising their real financial condition. It's like seeing pests crawling through the cracks while the whole structure is collapsing. The market begins to think they learned nothing from 2008. They've mixed solid assets with financial garbage, creating the illusion of stability while ordinary citizens pay the price with inflation and bailouts. Yesterday, for example, Bank Corporation fell 13% after reporting losses from failed loans to a few automotive clients. Western Alliance admitted that one of its borrowers committed fraud, dropping 10%. The regional banking ETF, KRE, fell 6% because almost all medium-sized banks ended in red. And this is no accident, as Jamie Dimon, CEO of JP Morgan Chase, said, "When you see a warning sign in the credit market, there are likely many more hidden, waiting to explode." The problem doesn't stop there. There's a dark, opaque private credit market, where funds lend outside traditional banking channels. Nobody knows how many bad loans exist or where. That's why investors sell first and ask questions later. No one wants to be trapped in another bank run. This year, we've already seen automotive companies go bankrupt due to dubious loans. Banks like Jefferies have lost up to 25% in October due to exposure to companies like First Brands, with more than $715 million at risk. Meanwhile, large banks suffer less but still fall. JP Morgan -2%, Bank of America -3.5%, dragged by fear dominating the financial sector. The S&P 500 is no longer falling because of tech stocks, it's falling because of banks. And behind all this, a disturbing question emerges: could this crisis be the perfect excuse to implement digital dollars, digital euros, and control every citizen's move? It sounds conspiratorial, but fear is spreading, and markets are shaking like never before. Today, we have a clear picture: regional banks falling, dubious loans, frauds, an opaque market, and alternative funds collapsing. Risk is limited for now, but contagious and explosive. The message is brutal: the banking crisis we thought was closed 2 years ago never disappeared. And now, the financial system is filled with hidden pests, ready to devour any sign of weakness. The clock is ticking. Each passing day, more of the system is compromised. Each news, each drop, each uncovered fraud is a spark that could ignite a fire. Meanwhile, ordinary citizens watch helplessly as history repeats itself, only this time, the storm threatens to be fiercer than ever. Sources: Reuters, coverage of regional bank stock drops after loan charge-offs and fraud disclosures, e.g., Zions, Western Alliance. Financial Times, FT, reporting on leveraged loan market exposure and the First Brands collapse impacting CLOs. Bloomberg, articles on loan losses and fraud revelations hitting regional banks. Barron's, analysis and coverage of the regional bank sell-off and loan charge details, Zions, Western Alliance, Jefferies. Benzinga/Yahoo Finance, quotes and market moves for the SPDR S&P Regional Banking ETF, KRE. The Guardian/The Straits Times/Fox Business, reports quoting Jamie Dimon and warnings about private credit risks. Reuters, specific piece, on Bank of America's loans to First Brands and confirmation those loans are secured, context on exposures. If you enjoyed this video, hit the like button, subscribe to the channel, and turn on the notification bell so you don't miss any of our upcoming content. Share this video so more people can enjoy it. I'm Juan Blisa, and everything shared here is the result of meticulous research, verified through reliable and internationally recognized economic and geopolitical sources. Because truthful information is never improvised. Thank you for your support.